What's going on, guys? Welcome back to the channel. I hope you're all doing good and having a great day. So in today's video, I'm going to be criticising people's investment portfolios. Well, no, not really. But what I am going to be doing is reacting to a video that I saw come out from MamaFurFur's, where she goes over her entire investment portfolios. I thought it could be interesting to basically go through the video, see what sort of things she's invested in and what sort of accounts she has set up, and basically just give my views on what I think of the portfolios. Coming from my perspective as a retail investor, and I built up almost a decade's worth of experience investing my own money. Now, just to be clear, the intentions of this video are by no means to be in bad spirits, and I think what she does on that channel is awesome, and I've got a high level of respect for her. It's just when it comes to the stock market, so much of it is speculative and subjective. I just thought it could be interesting to give my 2 cents and potentially a contrasting view on her overall investment strategy that could also possibly be helpful for you guys when looking at your own portfolios and basically just considering other viewpoints. I'm not saying that my way of investing is perfect by any means, but I always find it useful to get differing opinions and see what other people see value in, to open up my eyes to other opportunities out there. Now, before we get into it, if you are new around here, welcome to the channel. This really is the place to be for all the most relevant information on UK finance. So whether you're looking for content on the best bank accounts or credit cards out there at the moment, as well as videos on investing, making and saving money, this really is the place to be. So if you're not already, make sure you hit that subscribe button down below and click that bell so you never miss a video. And also, I know it is a bit cheeky asking before the video's even started, but I'd really appreciate it if you guys could smash that like button down below, as it does really help me out with the YouTube algorithm and basically allows YouTube to share these videos to more people that might find them useful or interesting. But with all that out of the way, let's get into the video.
I bet some of you have wondered exactly what we are investing in over here on the MamaFurFur's channel. So in today's video, to give you a treat, I'm going to review my entire 2020 investment portfolio, or even basically our investments up to date. We've been investing for a many number of years now, but it's super exciting to review and look back and see actually the rates of return we've experienced. And I want to share with you what we're investing in. To give you some context of me, if you found my channel by chance, I am a working mum. I have 2 small boys under the age of 8 up here in Glasgow, husband, 2 cats. And what I did was a couple of years ago, we actually had £24,000 worth of consumer debt. My husband brought it from previous relationships.
That's crazy, like inheriting someone else's £24,000 worth of debt and not completely breaking down. That's awesome to come out from that and now be investing and have saved money and everything.
So long story short, obviously we had that debt. It was paid off within 3 years rather than about the 5 or 6 years that we thought it was going to take. And then everything has just opened up for us in so many wonderful ways. Now, that being said, let's deep dive into my portfolios.
Okay, so here we are onto the investment portfolios. So let's have a look.
Okay, so the first portfolio I'm going to share with you, I'm going to show you our general investing account. So let me talk you through the full spread of what we have. I have a trading 212 general account. This is my kind of experimental portfolio. So it's not the bulk of our money, but what it is, it allows me to put into shares that I'm interested in, and they have options for investment ISAs as well.
This is cool as well. She's got a trading 212 account. I also use trading 212. I think it's one of the best entry-level investment platforms that's really cost-effective to use even with smaller balances. And this is also really cool to see that she's using it to push herself out of her comfort zone and just basically experiment with a smaller amount of money, which is sort of how I use mine as well.
Now, right now, I've made 2% year-on-year growth. I started with trading 2 over a year ago now, so 2% I think is fairly decent considering the pandemic. A lot of my shares were bought kind of before the March dip, and then I've bought a good batch in November, December time as well. Okay,
so 2% of growth in a year. I honestly don't think that's brilliant, but it's definitely positive, and obviously considering the pandemic, I'm not sure what exactly she was invested in and if she sold out of any of the positions, but some of those might have been the hardest hit from COVID. But it seems from the first look that some of these companies are actually quite volatile, so I would have expected it to be more than 2%.
I've got some shares in AMD. I've also got some AstraZeneca. I think I did a good choice. I actually bought before they announced their vaccine. Bank of America. Cineworld. This is one of my favourite shares right now. So I bought Cineworld a couple of months ago when they announced that they were closing until the spring.
So I'd say from a first glance of looking at this, a lot of these are sort of gamble stocks where they've done really badly due to the recent pandemic. And if they recover, great, stand to make a lot of money. However, I'm not sure about the certainty of why she's gone with these particular companies. So we see AstraZeneca, which she bought just before the COVID vaccine came out. So yeah, that's a good gamble if it pays off. But unfortunately for the share price, AstraZeneca actually announced that they're planning not to make any profit from these vaccines. So this probably won't have the same recovery as some other stocks out there. Cineworld as well, so she's bought in just after they went bust, which can be a very good time to get in. However, again, it could have continued to go down. But I see she's gone in with a small position just to test it and see how it goes, rather than putting all your eggs in one basket, which would definitely not be the right decision.
I've also got EasyJet. Now I'm going to talk about this in other videos, but EasyJet for me, I've got a good chunk of money in them. I'm hoping that I'm going to see maybe even that get to 50% growth. There's no guarantees. This is my experimental portfolio right now, along with some others that you're going to see. So, I'm going to keep an eye on that. If I feel that it's losing value and, maybe they're not going to do so great, it's one of the first things that I'll sell off and get out of.
Okay, so the biggest position is EasyJet. So again, this one seems a bit like a gamble to me. So yes, EasyJet share prices have plummeted because they basically just had to shut shop for the time being during the pandemic. So to me, this is one of those companies that if they do survive the pandemic and start bringing in some money, then yes, I think this is a great thing to go for and it could increase massively in value. However, personally, I'm just not sure about the financials of the company and whether or not they can actually last it through the pandemic without completely going bankrupt. So to me, this is one of those ones that if it goes right, it will pay off big, but if it doesn't go to plan, you could stand to lose a lot of that money.
I've got some General Electric, I've got some National Grid.
Now the rest of these shares like National Grid and General Electric, I'm going to guess that these are through referrals because a lot of the stocks that I get when referring someone to Trading 212 are these exact stocks. So I'm not sure she necessarily sees value in these particular companies. And actually these just could be made up of free stocks. With that being said, if you do want a free stock when signing up for Trading 212 or Free Trade, I'll leave my links down below in the description where you can sign up and get one free stock in each platform.
Progress Software, Royal Dutch Shell, I've got a couple in there as well. Uber Technologies, Under Armour, Unilever, Virgin Galactic, that's a bit of another one of a why not, let's just buy and see what happens with them. So that's my Trading 212 portfolio, as I say, my riskier, my little bit diverse portfolio that I have.
So this particular portfolio I think has some real value in terms of being a good practice account. With a smaller amount of money going into kind of more risky positions, I just feel that some of the stock choices are really quite high risk. And I think there are potentially other opportunities out there that aren't actually as risky as they're solid companies that are still being very successful but could still stand to make similar profits. So I'm interested to know how much research has gone on with the financials behind each of these companies. So looking at EasyJet again, I feel that it is quite possible that they could actually go bust entirely. So as a retail investor, I think an alternative to investing in these individual stocks is actually investing in investment trusts. So personally, I've currently got shares in Ryanair, which are a competitor to EasyJet, as you probably all already know. But the difference is I've invested in them through an investment trust rather than buying the individual shares myself. So how investment trusts work is that they're actively managed funds. So you basically buy shares in that actively managed fund. And they basically choose what companies to invest in and build up a bit of a portfolio. But the great thing is these are managed by professionals. And if they no longer see value in that particular company, they can just simply sell those shares and buy something else that they see more value in. So one of the investment trusts I've got, which has Ryanair in it, is the Baillie Gifford European Growth Trust. So I personally feel a lot more comfortable putting my money into this, knowing that if they no longer see value in Ryanair, they can simply just sell it and buy something else. So obviously you're not going to make as much gains as you would if you invested all of that same amount of money in that individual company. But that honestly doesn't really bother me because it means you can basically sit back and let them sort of manage your money for you, knowing that they probably know an awful lot more about these companies than I do as a retail investor. And this way of investing really appeals to me because you can make really high returns, and it just means it's not as essential to go into all the financials of all the companies you're investing in if you were to invest in individual companies.
Now the next portfolio I have, my husband has one as well, we use eToro. So again, both Trading 212 and eToro are general investing accounts. I really enjoy eToro and it is actually a great site. Now why I use eToro for these particular stocks is because the majority of these stocks are US based.
Okay, so next up we have eToro. I personally don't really get on with the platform myself as it's more focused on leveraged investing, but the focus here is to clearly invest in US companies, not actually using that leverage. So that's really cool to see, and it's definitely a good idea to have multiple platforms to allow you to invest cost effectively into different markets. And this is sort of what I do with my Trading 212 account as it's valued in US dollars.
First of all, I've got some Bitcoin within my portfolio, so I've got some Bitcoin there. I've also got Lloyds, obviously, and EasyJet, which are UK based, that's okay, and Coca-Cola Enterprises. But what I do like is I've got so much access to different portfolios. I can copy other traders on eToro. I can actually copy and say I want to use a portion of my money doing exactly what somebody else is investing in.
Okay, so that is quite cool because eToro do offer that feature where you can sort of copy other people's portfolios, which is quite good. And maybe some of the people out there with portfolios do actually know what they're doing. I'm personally just a little bit skeptical about it because who knows really how experienced these people are that you're copying. and I personally wouldn't feel that comfortable doing it. Whereas going back to investment trusts and funds, you get a similar sort of thing, but at least you have the peace of mind knowing that they're professionals. But equally, this is a cool way that they do it, and is actually probably more cost effective because you won't have to pay for the management fees. There's also actually a similar feature like this in Trading 212, where using their pies and auto invest features, you can actually copy other people's pies or set up your own ones and allow other people to copy those. I've actually made a couple myself, and if you're interested in seeing those, I'll leave a link down below in the description to them. And if you see value in them, feel free to copy them.
So overall, I would say I'm looking at just over, well, it's about 12 or 13% overall, including my cash that's sitting there. And my big players, I've got Apple, ExxonMobil, Pepsi, Coca-Cola Enterprises, EasyJet, Lloyds, Palo Alto Networks, Dell, and Bitcoin.
So from the look of these stocks, they're all quite volatile. So we have some tech companies and Bitcoin, which is cool. And I like the fact that she's using a small amount of money in this account. So it seems more focused on playing around and having fun with it, where I feel some people get caught up in trying to make too much money too quickly, because it does take time to learn. And if you go in with all your funds as a beginner, just getting carried away with how much money you could make if it goes well, you'll probably end up losing a lot of it if you don't actually know what you're doing. So yeah, overall I think this is really cool to see, and it's nice that she's playing around with a smaller amount of money, so hopefully she won't lose too much sleep over it if the trades don't necessarily pan out.
Now, talking about riskier parts of our portfolio, there's another portfolio I want to show you, and this is my cryptocurrency portfolio.
Okay, so we're looking now at the Coinbase account. So personally, I don't actually invest in any cryptocurrency myself. Part of this is due to the fact that I haven't really taken the time to research into Bitcoin all that much, as I just don't really feel it that necessary at the moment, as I'm making good returns from my equities investments. And this sort of just leads on to the fact that I don't really see the value in Bitcoin that other people do. I more see it as something that's just massively hyped at the moment, that doesn't really have the fundamentals to back it up yet. But that being said, that could all change in the future and my views might change. It's just not something that I'm personally into at the moment. Now, I know there are people out there that make a lot of money through cryptocurrency. Personally, I just look at it from a different perspective, that you could stand to lose an awful lot of money when it comes to cryptocurrency. And because so much of it is unregulated, it's not really for me, and I wouldn't go in with a serious amount of money.
I have bought into a little bit of crypto. I bought into Bitcoin because I felt this was going to be probably the most common cryptocurrency that could potentially take off. And I'm sticking by that choice, to be honest, right now, given the circumstance. As I say, at the moment, I've got £657.98 currently of the equivalent Bitcoin. This has pretty much doubled for me since I bought my Bitcoin. I put in a couple of £100 when it was about the $7,000 mark, £7,000 mark.
I do think this is cool though, that she's diversifying it into other markets, not just equities. And again, it seems like she's not being greedy and going in with a fairly conservative amount, which I think is a really good thing. This also makes sense that she's gone for Bitcoin rather than some of the other cryptocurrencies out there. And it does make sense that because it's the biggest, it's the most likely to succeed.
So as I say, I'm okay if I lose all this. It's very risky, completely out my comfort zone. But for me, I felt it was important at the time.
It's also cool to see that she's aware that these Bitcoin investments may actually lose value, and it's not just going to keep going up and up and up like some people think it will.
So now I'm going to take you over to our long-term investments, but I want to show you now our retirement planning. So the first one I'm going to show you is Pension B.
Okay, so now it looks like we're looking at the more longer term, safer investments. So starting off with a SIP with Pension B. Now, in my view, having some sort of private pension is essential, because actually the state pension is so small that it's incredibly difficult to actually live off when you come to retirement age. So it's a really great thing to have some sort of private pension, whether it's one that your company set up for you, or whether it's a self-invested personal pension that you can deposit into yourself. Now, honestly, I've never used Pension B and I don't know that much about it, but I'm interested to see how it works.
Why are we with Pension B? Well, as I say, the funds are the things for me that are a key driver. I've used them to transfer over many old pensions that we had, so it was super straightforward. They went and did that all for us, and now we have one combined portfolio.
So that's actually a really great idea. So if you work for a company, it's actually a legal requirement that they offer you a workplace pension. So this could be with a similar company like Pension B, and basically it's just a pot of money that supposedly they invest for you. And so essentially a portion of your salary each month goes into this workplace pension, and usually your company contributes to it as well, which makes it quite worth doing. But the problem is a lot of these workplace pensions aren't actually that good at managing your money, and the money isn't actually invested particularly efficiently. Unfortunately, with most companies, you can't actually withdraw the money from your workplace pension into a SIP until you no longer actually work at that company. And then you can close the account and withdraw all the money into your private pension. And this could be a really great thing to do if you've left a company and you want to start putting that pot of money that's in your pension to better use by putting it into a SIP and managing it yourself. Now, I believe with Pension B, you pick sort of a risk appetite rather than picking individual stocks you want to invest in, which is definitely a good thing for certain people out there. Personally, I have a SIP with AJ Bell, and manage it entirely myself, choosing what stocks I want to buy.
So I've blurred out the actual values because I think it's just important to see the rate of return here. I don't want to disclose the exact amount in our pensions, but in our pension right now, we're seeing 10.2% year-on-year growth since we've been building this up.
Wow, I'm actually really impressed by that. 10% a year in growth is really quite decent performance, especially considering a lot of these pension companies are designed to be really low risk, and from what I've found, struggle to make about 5% each year in growth. So yeah, I think that is really decent performance.
To be now seeing 10% growth on that, so the average of 5, just under 5 or 6%.
So it sounds like it could be a decent option for a lot of people out there. Yes, you obviously could make more if you're managing it entirely yourself, but it really depends on how much time you have and want to put into something like this, as there's obviously a learning curve if you're new to investing.
The next part is my investment ISA. Now I have one investment ISA for our family right now.
Okay, so next onto the investment ISA. I think an investment ISA is an essential for long-term investors who really want to focus on building wealth over a longer period of time. And if this is your goal and you don't have an ISA, you should really consider getting one, as the tax benefits, if you continually deposit into them year after year, become really valuable. Especially as there's a lot of talk in the UK at the moment about lowering the capital gains tax allowance over the coming years.
So here we are on Vanguard, and I'll show you what we've been investing in up to now and my choices moving forward.
Okay, so the choice of platform is Vanguard. Now honestly, I'm not the biggest fan of Vanguard for myself, but I see it has value for certain investors out there, especially if you have a smaller amount of money to start with, as they don't actually charge any fees when buying and selling. They also have pre-made do-it-for-me investment options as well, for if you just want to pick a risk appetite rather than individual stocks. But the big limitation for me is that they only let you invest in Vanguard funds, so that rules out the possibility to invest in individual companies, unit trusts, investment trusts, and other world markets. And you'll basically just be restricted to Vanguard ETFs, which are pretty much just a range of different index funds. Now there's nothing wrong with index funds, and they're a great option, especially for beginner investors. It's just the fact that it limits you so much being able to only invest in these particular things, as there are so many profitable areas within the stock market, so it just seems a shame to limit yourself to just these.
So right now, I'm just going to call this out. Okay, we've been investing for a good number of years now using Vanguard. We have seen, as you can see right there, 27.5% growth on our portfolio.
Okay, so the total return is 27.5% over the years. I'm really quite curious to see exactly how many years this is, because obviously that percentage is quite appealing if it's over a couple of years, but if it's over a longer period of time of say 5 to 10 years, I wouldn't say it's as appealing, and I'd look to invest in some other opportunities.
Now, a couple of the principles, I have been buying consistently the same near enough fund every single month. The amount has changed slightly, it's actually increased in long line with what I'm earning. It's a set percentage of our money.
Okay, so this is great. She's using dollar cost averaging by investing consistently every single month and splitting off the same proportion of her income every single month to invest. And this is actually similar to how I structure my savings as well, as it's a good way of keeping disciplined when it comes to saving, even if you start earning a lot more money. I also think it's cool that she's investing in the same thing each month, so she's obviously done the due diligence to find something that she sees value in over the long term, so feels happy consistently putting money into that. I would say though, it might possibly be beneficial to try and buy on down days rather than just a consistent day of each month, as I feel it's always better to try and avoid buying when the market's at a premium.
So we have 2 junior investment ISAs. Our kids cannot get access to the money till they're 18, which is about 11 years and 13 years respectively. They have also seen 11.6% growth. They've been learning the principles, and my hope is, these are going to be funds in 11 years, 13, 14 years that could be a deposit for a home, it could be their first car, it could also be paying for an education in some form or starting a business, okay?
I think this is great as well that she's set up junior ISAs for her kids, and it seems like she's turning it into an educational process where they can sort of manage the money with her, which is really cool. And I think learning about money like this is a really important thing to do at a young age, and unfortunately I think a lot of kids out there miss out on things like this, so it's really cool that she's investing in her kids.
Okay, so you want to know what we've actually been investing in, and here you go. I use the 100% equity fund and the 80% fund.
Okay, so now onto the actual investments themselves within Vanguard. So most of the money is invested in the Life Strategy 100% equity fund. So I've just had a quick look at this particular fund on Hargreaves Lansdown to basically analyse and see how well the performance is doing. So you can see it's got a consistent uptrend over a longer period of time, which is great, that's what you want. However, personally, I just think there are more profitable options out there. So this fund is designed to be really diverse. So it's made up of different world indexes. So whether it's the UK, US, Japan, or Europe, it's basically a cover everything fund. and that's in a way a good thing. However, I just think it's slightly over diversified, and I think it'd be more profitable to basically cut out the things that aren't making as much money. So for example, the FTSE All Share Index, I personally wouldn't want this in my portfolio. It's been flat for 5 years and it isn't consistently going up. So I'll just basically cut that one. And I think that cutting out things like this would improve the overall returns. And what I would do is go through the list of what's included within that fund and just basically find the ones that are the most profitable and have the most consistent uptrends. One example might be the S&P 500, which has had a very consistent uptrend over a long period of time. And so on the comparison chart, by just adding the S&P 500 index, you can see how the fund's performance has compared to the S&P 500. And you can see they've had similar performance, but the S&P 500 has outperformed it. So for me, I'll just go for something like that rather than diversifying for the sake of it. Now the overall setup I think is pretty solid, and she's clearly put a lot of time and effort into finding lots of good features out there to take advantage of tax benefits and finding platforms that are optimised for her needs. But overall I can't complain too much, as all of these things that she's investing in are still profitable, and that's really the fundamental goal. If I was to go in and change up a few things myself, the first thing I'd do is prioritise the investments by which ones are actually consistently profitable, and basically just cut out the things that are flat and not making any money. I'd also consider switching up the platform for the ISA from Vanguard to maybe something like AJ Bell, Hargreaves Lansdown, or even Trading 212, as they give you a much broader range of options when it comes to investment opportunities. And I'd definitely consider looking at actively managed funds. But there we have it, that basically covers everything for today guys. And I really hope you guys did enjoy this video, as it is a bit different from the kind of content I usually make. But I hope it was useful and interesting. And if you did enjoy it, I'd really appreciate it if you could smash that like button, as it does really help me out with the YouTube algorithm and just allows YouTube to share these videos to more people that might find them useful or interesting. And if you are new around here, make sure to hit that subscribe button down below and click that bell so you never miss a video. And as always, I'd love to know what you guys think down below in the comments. So if you like this style of video, definitely let me know. And if you do have any questions or feedback for me, just drop them down below in the comments as well, and I'll make sure to respond to all of you. But with all that being said, take it easy guys and keep saving.